Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is NFP Live. Today, we're going to look at the latest round of jobs numbers. We're going to see exactly how they impact the global markets. We're going to talk about some of the biggest headlines of the day, our interest rate expectations. We've got price action. We're going to look at the Aussie, the dollar yen, the NQ. We're going to look at E-mini NASDAQ futures on that 5-8-13 crossover strategy. We're going to look at Fibonacci's on gold, silver, and then also the Fibonacci's on the dollar yen. So I want everybody to be welcome and trade this well. We're going to start off with a bit of a tutorial on what some signal providers do, because we do have a buy signal right now coming up on the Australian dollar, US dollar, but I want everyone to understand what high risk is and that this environment is extremely high risk, not because we don't necessarily have our leverage dialed in, but because the volatility is going to hit the market, and it's going to hit the market in a big way with this latest round of jobs numbers coming out in about 10 minutes. So good to see everybody back in the room. Wow, too many to name. Yes, sir. Good to see you. Yes, sir. Pac. Very innocent man wants to buy. I don't know if we buy anything just yet. We may have to wait. Okello, good to see you. Okello, yes, sir. Just a quick reminder, dollar yen, absolutely. Let's see what else. Patrick Mongola, good to see you. Patrick Bio, good to see you. Bio Olalir, good to see you from Moscow. Shisha, and let me see. Ultron, is it positive for the USD? We don't know just yet if it's positive for the USD. I think that it's really hard for me to say. I just don't know. We're expecting a low jobs number today, though. That's for sure. It's certain. Good to see you, Wizard Alvin, over in the How to Trade community. Always a pleasure, guys. Okay, I want to start off with just sort of a quick tutorial on what some folks do to drive participation in the markets. And it's real important that we understand, you know, it's not necessarily that a lot of folks have great trading ideas and they put them out there and they say, okay, go get them. They also want the market to be really active when they put these trade ideas out. And that's one of those things that I always am skeptical of. When anytime somebody calls a market going into like an NFP, we don't know which way things are going to break. We just don't know. This is a great example of a trade that we've got going right now. Now, 920 crossover. The 9 EMA crosses over the 20. We've got the Australian dollar, US dollar right here, 4-hour chart. Now, this is one of my favorites. The 4-hour chart on the 920 crossover really is a pretty solid time frame to be trading. It gives us a good look, a good sort of look at the macro market conditions, and also positions us fairly well into our trades. We've got good trade location here. If we're going to go ahead and buy the US dollar, the Australian dollar, US dollar, we are officially long from right around 65.50. There's our big gold candle. Remember, that occurs. This is our coded 920. So when we get a break, that 9 crosses over the 20. That is essentially a signal to buy the market. And right here, we've got a market driver coming in. So we're right at break even. We don't know which way that this news release is going to drive price, but we do know this. The market's going to move. So we've got to go ahead. We've got our 1-to-1 risk versus reward dialed in. Stop loss is right beneath this swing low right here, which was a sell signal. And now we've got the buy, and we're looking to get extension back up to about 65.88-ish, right around maybe 66. So good to see. I think that we've got an opportunity there potentially to do something. But once again, I don't know which way the market's going to break on this news item. So we got to be very, very careful with what we do. Let me see, Trevor. Good to see you, Trevor. Arun, NFP week date. I believe so too. I think it's going to be a week, really just a week sauce showing. That's my opinion. Tina, good to see you. Tina, it is never a cracking moment. The market is starting to move fast. Yeah, we're getting ready. We're getting ready to see some major volatility. Petey, hello from Scotland. Good to see you. Welcome, Scotland. All right. Truly global community here. We got everybody from all over the world. All over the world, you name it, they're in the room for this. And so I'm always happy to answer any questions that I can and give you a little bit of my own insight here. Let me see. Bio looks positive, but it might be looks negative, but it might be positive. And it's anyone's guess. That's for sure. Ahmed, good to see you, Ahmed. Olir, gold. I see a higher high. Definitely a possibility. Kiwi Pips, morning, good evening, good afternoon, wherever you may be. We're definitely up early here in Dillon, Montana. All right, guys, let's go ahead and get to it. I want to go through a few of just the basic fundamentals of what NFP is. Remember, if you want to trade any of these ideas or really get started in the markets, switch markets is probably your destination. That's where you want to be. NFP itself, U.S. non-farm payrolls, all it is a jobs report. We're just measuring the number of folks that are being employed, number of new jobs created. It's an economic indicator. It signals growth or contraction. That's really all we need to know. Here's how you read it. Previous release. In the projections, we are judging this number on a relative basis. So if we come in above our projections or above the previous release, we're going to think that maybe it's a bullish type of a thing. If we come in below, that's going to be a bearish type of signal, an economic contraction. So we want to understand that it's all about our relative. We're just trying to be relative to what we think is going to happen in the previous release. How's the NFP impact the Forex? If it's above expectations, it's going to be bullish for the USD. Below expectations, it's going to be bearish as far as stocks, equities, and commodities, above expectations, it's going to be bearish. It's going to speak to a stronger dollar. It's going to send stocks down. And if we're below expectations, we believe it's going to be bullish for equities. This is the scenario we're looking at right now for today. We think that we could get a real nice bump because the jobs number is going to come in low, and that's going to signal rate cuts are on the way, and that's good. That's good for stocks. U.S. non-farm payrolls, we're expecting about 73,000 to come in. Previously, we had about 75,000. Unemployment rate, this is what we're watching today. If you don't take anything else away from this stream, the strategies, the trades, whatever, that's great. We are watching the unemployment rate. I am watching the unemployment rate. That's the most important number that's going to drop today. Very, very important. Previously, it was 4.2. We're looking for 4.3. We could go a lot higher than that if we're not careful. Now, what basically this is 4.0 is the Fed's benchmark. This is what they really want to. This is 4% unemployment, sort of dovetails with 2% inflation. The Fed believes if they can deliver those two metrics, they're doing a great job. I don't know. I think it's all debatable what we have here. Historical levels, you can see it's just a peaks and valleys. Unemployment, though, relatively low compared to where it's been at some points in the last, 60 years, 70 years, 80 years. Here, the financial crisis, you can see right there. Unemployment was sort of in a rough area. Non-farm payrolls, COVID-19. Really, those are big-time contractions and jobs that we just don't typically see. It takes something really major for us to get a negative print. Now, as far as what I would say is important today, unemployment, 4.2%. 4.2%. You can see we've tested this area several times over the last year. 1, 2, 3, 4, 5, 6. If we break above 4.2, I think we could really go higher here. So be very careful with your trading. If we get that unemployment up around 4.5%, they are going to want to cut interest rates, not by just a quarter, but by a half. One last couple things. Lutnick just said this one. This is one of Trump's cabinet members that runs the economy, essentially. Predicts better job number accuracy after Trump fired the BLS chief. Remember, new folks are in there doing the numbers. I don't know what we're going to get. No one knows what we're going to get. Lutnick says, we're going to get some better job number accuracy. Are the books cooked? I don't know. And then right here, this is what it's all about with interest rate expectations. We're looking for about a 97.6% chance that you're going to get that rate cut we've all been looking for. All right, let's get out the price action here. Take a look at a few markets here before the number drops. Dollar yen, I was asked to take a good look at this one before we started here today. This is my daily Fibonacci retracement sequence. Remember, if you're not a Fibonacci fan, go ahead and tune into a few of my streams. You'll get acquainted with them relatively quickly. There's your swing low, your spike low, 28th of August. There's your spike high right there at 149.15, and you're sort of in pullback mode right now. We're sort of right around 148. I love this daily golden zone. I've got a buy order sort of queued up right there from 147.75-ish in the middle of this golden zone. We got the 13-day EMA in there at 147.80-ish, and then you've also got the 62% at 147.60. This could be pretty good stuff. This could be pretty good stuff right here. So I'm watching this one closely. I think we've got a chance down there to maybe get long with a little bit of meaning. It's not because I believe that this pair is necessarily going to go up or the dollar is going to strengthen. I just think that we have an opportunity to trade a technical in a very volatile period. So we're going to go ahead and throw that one down and see what happens. I want to cover gold and silver. We got 2 minutes left. These are the key levels, guys. Right now in gold, we're trading 35.53. Really just a big bullish trend we've got on the daily. The pullback yesterday, absolutely beautiful. If you got that one right down to 35.11, somewhere in there, that was a brilliant trade. We've been waiting to buy pullbacks for a long time, days and days and days. You finally got one yesterday. So if you got that, great. It was really a tough trade to execute, though. We didn't bring any of our key levels into play. Deep retracement on the 4-hour chart. We'll talk about that some other time. But this pullback right here, if we get it, I'm looking at 3,500. That's our key level. Probably shading it, looking at 35.0250, something like that. Silver. Silver's probably a chance to actually trade today. 40.17, something like that. Pullback zone is exactly what we want out of silver. So if you're trading silver, we're still buying pullbacks. We're still incredibly bullish. Very, very, very committed to the long side of the metals markets right now because realistically, a weaker dollar is going to send these metals higher, and it's also going to send stocks higher. All right, so what do we have going for our short-term strategies here? Well, we're looking at the dollar yen here on the 1-minute chart. This is sort of our 920 EMA crossover. We're going to go ahead and qualify that with an RSI indicator. So once we get into oversold territory, we're going to need to bounce back and get that crossover and see exactly what we've got going. So we're going to be watching this closely. And then I've also got a 5813 on a 1-minute for the NASDAQ futures. We're going to be watching that one, and I'll explain exactly what we're doing while we're doing it. Okay, so what do we got? Does anybody have a number here? Let's see. Okay, there's the big plunge right there. Okay, right there, 147.47, 147.50. So if we're trading that dollar yen, we just pretty much got long right there, 147 3/4. What's going on with our other trade? Right here, okay, our 4-hour Australian dollar, this thing is breaking. We've got, our profit target's up there right around 65.88. That initial break is extremely bullish. That is kind of just how you draw it up. It's high risk. It's high risk. But you did get a nice little pop there. So if you wanted to take the money off the board, I wouldn't really blame you. Go ahead and take it. It's such a nice pop that when you get trades like that, you got a real opportunity to make a little bit of money here. So you can do whatever you want with the profit target. For me, you get that big of a run early on, you just go ahead and flatten the trade, take the money, and rack them. That's a winner. High risk. Still a winner, though. Dollar yen just falling off the table here on the 1-minute chart. What we're seeing is a major correction. Let's go back to our key levels. Okay, key level got absolutely freight trained right there. We were long somewhere right around 147.71. I would say that if this area right here doesn't hold, if you don't see this area hold in this dollar yen, you probably have to bail because you're going to go ahead and trade down a little bit. But you got to have a little bit of patience with these, especially on a big-time news release. So what are we seeing? We're seeing the U.S. dollar get absolutely pummeled again. It's been getting crushed all year long. Do we think we can pick the bottom of this market today? Not quite yet. We're only looking at about 1 minute after the release. We've got to be very, very careful with what we expect. But you see that bounce, that kind of bounce right there off of 78% in the dollar yen. Now we're back up to 147.42. We're starting to feel a little bit better about our trade, but we took a massive draw and a lot of heat right there. Personally, I don't like that much heat, but that's just sort of the way some of these trades work out. You'll notice we had a buy limit order. It wasn't even filled on the demo, but right in there, I'm still watching this golden zone. I think this could be an area where we get that bounce and then we trade higher from here. Definitely interesting type of a dynamic, though. So what do we have going right here? Dollar yen, 920, okay? 920 EMA crossover. When the 9 crosses under the 20, you're looking to sell. When the 9 crosses over the 20, you're looking to buy. Now, here's the kicker. When we're on a 1 minute chart, trading something like the dollar yen, which we just looked at our macro levels, we need RSI. The relative strength indicator is going to be our confirming device. So right there, we dove deep into oversold territory. Beneath 30, now we want to buy it back. And what we can do is just basically wait for this crossover to develop. Get an opportunity right up here maybe to cross this thing over, and then we'll look to buy. Now, the beauty of this is even if we trickle down and trade down into here a little bit further, and then we get the crossover later in the session, that's going to be a much stronger trade on a 1 minute chart. That's definitely for sure. So a lot going on here, guys. You can see how crazy and frenetic the action can be. What was the number? Who's got the number? Does anybody have the number? Let me see. Will the markets believe, Son Goku, will the markets believe the numbers you think? No, I don't. I think you're going to see maybe an inverse reaction today. Let me see. Nothing happened. Hello from Brunei. Good to see you. Nothing. Elaine, good to see you. Elaine, Christy, man, so many names. Thanks for joining, guys. So what do you guys, what was the number? Does anybody know it? 222,000. Kiwi pips, 22,000. Okay, we've got to get to the bottom of this. I'm watching interest rate expectations right now. 22,000 is terrible. Absolutely terrible. We got to get to the bottom of this. That's absolutely terrible. You can see what's happening right here. Basing out on this dollar yen. We get the crossover. We'll have an opportunity potentially to go ahead and bid it. All right, let's have a look at the report, and then we're going to get back to our short-term trade. And I want those markets to base out just a little bit, then we're going to get involved here again. Okay, right here, this is the official economic release, Friday, September 5th, 2025. The employment situation, August of 2025. Total non-farm payroll employment changed little. Whoa, that's horrible. Changed little in August, 22,000, and has shown little change since April. The U.S. Bureau of Labor Statistics reported today the unemployment rate at 4.3%. 4.3%, so it did tick higher. I was looking for a multiple bump there. I was looking for like a 4.4, 4.5. That's horrible. You got another set of bad jobs numbers. Wow. Okay, a job gain in healthcare was partially offset by losses in federal government and mining, quarrying, oil, and gas extraction. This news release presents statistics from 2 monthly surveys. Wow. Okay, so here's what we want to do. We just read the top line, and that's what all the reporters and everybody's going to focus on today. They're going to go, okay, it's horrible. And it really was. We were expecting 75. It's now 22,000. Let's go down and have a look at the revisions. Devils are always in the details. The devil's always in the details, guys. This last paragraph is where we revised the previous releases. Okay, I haven't seen it. Here we go. The change in total non-farm payroll employment for June was revised down by 27,000. For 14,000, a negative 13,000. That's the story of the day. I just showed you that long-term chart. We don't go negative on NFP. Negative 13,000. The change for July was revised up by 6 from 73 to 79. With these revisions, employment in June and July combined is 21,000 lower than previously reported. Ugly. 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 The employment for June was revised down by 27 from 14 to negative 13,000. Negative. Holy cow. We don't know what the numbers are. The numbers are, throw them out. Throw them out. You don't know what they are. I'm telling you right now that if you're looking at a number that low and the previous one was revised down to be negative, that means the folks that are in there now keeping the statistics are completely changing everything. This is interesting. To me, this suggests that you're going into a recession. No question about it. The interest rate cuts need to be more aggressive. They're going to be calling for a 0.5 point rate cut. No question. At the next meeting at the 18th. Talked about this a little bit more on X. I think that, wow, unbelievable number. So right here, we're watching this. As soon as we get the crossover, you pretty much buy and try to pick the bottom of the dollar just because you probably will see it strengthen from here on out. As far as what we wanted to do with this 5-8-13, really an interesting strategy. We missed the trade, of course, because I was reading the actual report. But what I was thinking with the 5-8-13, very, very good scalping strategy. You take a 5 EMA, an 8 EMA, and a 13 EMA, and you play the crossovers. So when the 5 crosses over the 8, which is the one in the middle there, and price closes above all 3, you buy the market. So right here would have been your crossover. The red one's the 5, the blue one is the 8, and the purple one's the 13. Right there would have been your bid. That would have been your bid. Where's your stop out? Right here. How you doing so far? Pretty well. Nice little runner. So 5-8-13 is a fantastic strategy. Unfortunately, I was going through that report and we missed it. Let's go ahead and go look at gold, though. We've got to look at gold. 35.77, 35.78. You can see we wanted that pullback so bad. We needed a strong jobs number to get it. We did not get it. So right now, what would we be looking to do potentially? We'd be looking to bid. Do we have anything on the gold market that can help us? Or excuse me, on the 920 that can help us? You can see right in here, this is where we got long, boom, boom, and now you're sort of in a big type of bullish rally. Oh, man, what a fantastic trade that would have been. You're looking at bidding maybe 35.555. So at this point, I want to do anything I can to get long gold. Now, it's difficult because you need tools that are dynamic, meaning the moving averages probably aren't going to help you right now. Let's take this right down to a 1-minute chart. Fibonacci retracements are dynamic, and you would go right there, right from the bottom of that move, that NFP move, right up to the top there, that spike high, and that pullback, pretty good. Where did it pull back to? 75-ish? You betcha, 35.74, 35.75. So at this juncture, you really are just looking to buy pullbacks. There's no question about it. For me, we've got to see a range set up a little bit first. We've got to see something that's going to give us an opportunity potentially to trade, and you can see this is just beautiful. That's a break. Boom, boom, pull back, and now we're moving higher. Absolutely unbelievable. Let me see. Wizard Alvin, thank you, Shane. Win on the U.S. dollar, Japanese yen, 40% pullback. Gold just peaked. Yeah, I don't know. I think gold's going to 3,600 today. I think there was somebody in the in the live chat that just pointed that out. This is absolutely exploding. Eli, what happened with the DXY? Well, it's just reversing. What you're seeing here is chop. Let's go right here. You can see that was a pretty darn good little Aussie trade. Let's go to the DXY. Okay, 4-hour DXY. What's happening right now? It's a great question, Eli, and you're absolutely, I mean, this is the question to be asking. If you're going to ask any question, this is the one. What you have is a negative jobs print. They revised the last negative. I mean, I got to pull the charts back up and show you how rare a negative NFP is. Let me go get my historical slide here because it's sort of the point that I wanted. We just ran out of time, but it was the point that I wanted to really jam home. It does not happen. You don't get negative NFP prints. You don't get it. Wow, unbelievable. In any case, right here, you've got the 4 hour setting up on a sell here on the DXY. So what we had was sort of a real bullish price action a little bit earlier in the week coming out of that Labor Day holiday. Thank you for everybody that joined us. We were having a lot of fun on Labor Day. Nice big uptick here and then a pullback. And now you've got the crossover with this dollar index. So when we're looking at something like the 920, this is essentially a sell signal, suggests that the DXY is going to come down further. Why would it be doing that? Because they're going to have to cut interest rates and more than likely more aggressive than we thought. Now, here's the problem, guys, and I'm going to go ahead and just tell you the word of the day, and then we'll get back to price action. The word of the day from the financial media will be stagflation. We talked about stagflation about a week ago. I gave you guys a quick breakdown of what it is. What it is when you have inflation stays high, consumer prices stays high, and then the jobs market comes down. It's a nightmare scenario. So you've got no new jobs, you've got high prices, and basically the consumer's sunk. There's no way to work your way out of the hole. You're still spending $50 for a steak, but you're only making $40 for the day. It is a nightmare scenario. We haven't seen a period of stagflation here in the United States since the late 1970s. That is what everybody in the world right now is worried about because, hey, listen, the United States sneezes, the world catches a cold. The global economy still is pinned to the United States to a large extent. If you do see a period of stagflation in the U.S., it's a nightmare scenario, and it's the things that market crashes are built out of. It really is. So that's the situation that's developing, and now we've got a situation where the dollar's losing a lot of puff. Why? Because they're going to have to cut interest rates in a big way. Well, that's great. What's it going to do to inflation? Inflation's high. It's far from being under control. Stagflation will be the word of the day if you watch the financial media. And if it isn't, they're stupid. That's the first thing. Guys, I'm so far behind on you. There's so many of you guys asking questions. I'm just way far behind. Let me see. When are the numbers out? Jobs numbers. Vegeta, they came out bad news, 22,000, really an ugly number. Sengoku, sell at the next big number, 3,600. But with these numbers for NFP, I feel 3,600 will get broken soon. I wouldn't do anything to the short side of the market, the gold market. Okay, now we're getting a little bit of action right up here. Let's go ahead and take a look at our gold 920. We still got a ways to go before we get a trade there. I would be looking to buy pullbacks. So for me, the 1 minute is it's a pretty good chart for you, but this 5 minute, this isn't bad either. Go to the 5 minute chart, gold. What are we doing? We're looking to grab the pullback. So we sort of topped out. Oh, I love it. I love the trade. Let's go ahead and put it down. So right here, we're going to go trade. Bang. I want my buy order. I want my limit order, and I want it right here. I want it right there, 76. I want 76.60s. Let's do that. Okay. What did we just do there? We put our order in the queue. Put our order right in the queue there at 35.74. Just above that, I want to shade it because the ranges of these bars are so big. I got no problem really shading it up there $1. What are we up, $2? Maybe we bring that in just a little bit, right around 75-ish. Remember, with ranges this big, you just sort of have to go with what you got, meaning you're going to be taking draws. We're searching for more money here. So if you're going to work a shade off of like a 35.74, something like that, I want to be somewhere probably right up around 35.75 and a half. That's a pretty good entry. So 5 minute chart, Fibonacci retracement sequence. We are looking to get long with price action. That's what we want. So the pullback, very simple strategy. The pullback right here is going to sort of test this market structure, and we want to grab a bump right off of 35.75. That's the goal here. So we're watching closely. We're up at 35.81. A lot of action. I mean, absolute lot of action here. A tremendous amount of debate of whether we're going higher or lower. I think we're going higher. I think you guys are nailing it over here, Sengoku. What you've got is a 3,600 up to the top side, which would be your next big round number. Do we want to sell right in front of there? I wouldn't take a position. If you want to scalp from in front of 36, go for it. Right here, I would love to get this long right here. Take this bid and look to hit it maybe for $2 or $3. I would love that. So if we were in there for like 35.75-ish, I'd be looking at 35.78s, maybe 35.80s, depending on how price action is. But we should get that bounce. Now, if we don't get that bounce, then we just got to vacate the premises. And I'm more than happy to let this thing draw against me for a minute or two just to see what happens. But if it gets way out of hand and goes down in my Fibonacci Q, then we just got to pull the plug and come back with a better entry point. But this looks to me like a big-time bullish day for gold. There's no question about it. Right now, gold's up about 1%. I think we probably close higher than that. We are making new all-time highs, though, pretty much every price bar. So we're watching closely. Okay, come on. Let's see if this market comes to us here. I understand that it's sort of a small picture, but let's blow this up so we can actually have a look at what's going to happen here. Okay, now we're printing 35.80, 35.81. All right. Remember, our entry is somewhere right around 35.75 and 3/4, 75.5. I'm going to give this another minute or two to see if it sets up. If not, we're going to have to move on to do something else. But remember, as a trader, they pay you to wait. They don't pay you to trade. So right here, we're just sort of waiting. We're waiting. Let me see. Steve Francis, hi, Shane. How will the US 30, US 500 react to the NFP news? It should blow them through the roof. Right now, we're seeing mixed participation. I will pull up I'll go ahead. I'll look at the US 30. That's two of those requests that I've got. I'll look at the US 30 here in a second. I want to execute this gold trade, though, and just sort of show how fast this thing can happen and how, if you're going to scalp these type of market conditions, how fast you have to be. We'll see if I can get the job done. I've taken a few of these in my life, though. That's for sure. Nico Letterman, let me see. Question, do you not have a fixed risk versus reward that you aim for, and are you open to taking negative RRs sometimes? Thanks. No, I try to shoot for at least a 1-to-1. So in this case, I'm probably open to risking about $5, something like that. Get out like at 80. But listen, on a Fibonacci scalp in a real active environment like this, if this thing gets us in and then bounces about $3 in my favor, I'm going to take it and I'm going to bang. But that's a real special type of a trade. What we're doing here is real. It's what I call high impact scalping. And the idea is that if you get good positive price action right away, you get what you're going to get front and center. You take the money off the table immediately. So if this thing goes and we get in and then it bounces up in my favor, I'm going to take it off almost immediately. I'm looking for probably $3, $4 maybe, and it has to happen fast. We're not going to sit. I'm not taking a position from 38%. Now, you can make a lot of money doing that. I'm not interested in that, though. Right now, we are scalping. So I want to see, okay, right there, that should have got us in. Are we in? Okay, we're officially in. I want to see this bounce right back up in here, right up in here to probably 78, somewhere in that. Now, we're watching it very closely. Okay, that's a pretty good sign right there. There are some bidders. Now, the pressure is definitely on to the downside. We're still very bullish. We like our bullish read, but we have to respect the downside of this market because there's a tremendous amount of participation in here. We cannot sit around and wait. Okay, that's the kick we want. We want one more big kick higher, and that should pay us off. All right, right there, we're right at 38%. Now we're starting to break. Now I'm starting to think, okay, we've got to exit. We've got to start thinking about exiting. I'm watching 35.70 very, very closely. If that gets taken out, we're going to just leave, and we're going to scratch it, and we're going to go on to another trade. Right here, though, we're seeing a fight at 38%, which is what we expected. Still an incredibly bullish read, but now we're starting to get down into that NFP range. I don't feel nearly as confident as I did right off the bat. We're watching closely. I would say this trade is on life support. I'm not going to sit around and wait. I'm not going to take a massive draw. I'm not going to lose $5,000 on this trade. This is a very tight scalp. It's coming back our way now, right up at 35.74. What can we expect from here? I genuinely don't know. It depends on where the bidders do decide to step in at. Are the sellers exhausted? Is that going to be is that the end of the pullback? It's starting to look like it. If it is, then we've got an opportunity here to maybe make a few bucks, but it's it's got to happen fast now. I want to get the money right now. I have no intention of standing around and waiting for this thing. Okay, now there's our bid. Okay, now we're talking 35.76. I want to see bidders at 35.75. If we can get them to step in and dominate, then we've got a great chance to win. Right now, we don't. The jury's still out. There's the kick. 35.75 is catching bids. Bidders are there. They're there, but they've got to take back over. They've got to dominate what's happening in the market. If they do not do that, I have to go. Right there, okay, 32, 14, 75. Now we want to see the kick. Now we're looking for 80s. 35.77. Is the worst of this over? Right there, 35.78, 35.78, 35.78, 35.79, 79.79, out. That's it. All right, that's scalping, guys. If you guys want to be scalpers, that's the life. I can tell you that trading like that made me old when I was young. That's stress. If you guys want to trade like that, the world can be your oyster. You can make a lot of money really fast doing that stuff. Did we call the market correctly? Hell yes, we did. The key to that type of trade execution was not getting scared and bailing down here, but being ready to get out. My eyes were firmly on 35.70. If 35.70 gets nailed, I'm gone. If you're going to scalp, you got to have the discipline to pull the plug on it when it's time to pull the plug on it. And that's the hardest thing to do in all of trading. Is that a great trade right there? Yes. That's some high-level stuff. And it doesn't always go well. A lot of times you'll be in one of those trades. Gets a little hairy. I know I should get out, and then you hold on, and you end up taking a loss that just isn't commiserate with your topside target. We were pretty much shooting for 35.80. We got it. Was it a good trade? It's pretty good. Your low right there was 35.72, so we took a $2 draw, $3 draw, approximately. I'm not being overly exact here. But we took about a $3 draw there, and we got paid, $4 or $5 on the top side. Over time, you can make a lot of money doing that. The question you have to ask yourself as a trader is, do you want to live like that? That's really hard. That's really hard. There's not too many scalpers around that are discretionary traders that do it manually. I've been able to last for a while doing it. 15 years, 13. But big picture, that type of trading isn't for everybody. But Fibonacci's do work. They do function well. Let me see. What about the U.S. dollar, Japanese yen, sir? Thank you. That was great. I don't know, Nico. I think I just lost some of the rest of my hair. Tina, that was cool. Thank you. All right, let's go right here. U.S. dollar, Japanese yen. All right, Wizard Alvin's hitting the hay. Nice job, Wizard. Show up, get the money. Go ahead and go rest. Fantastic. Have a great time. Great time down there in New Zealand. Gordon Williams, good morning. Good morning, good afternoon, good evening. All right, we had a couple questions that I want to cover, and then we're going to go look at some of the headlines, and I think we'll call this one a day. If you have any other markets you'd like to look at, go ahead and throw them in there. I can't cover them all, guys, but I'll do my best. Let me see. Sir wants to look at the dollar yen. Let's go back and take a look at that. We did have one that was sort of brewing. Okay, this I like. What's happening in the dollar yen is pretty good. Pretty good stuff. What you've got there, this is our 1 minute, our 1 minute 920. Do I want to stick with a 1 minute chart now? Well, I mean, you're free to. The best thing that this trade probably will have going for it is we know exactly where we have to put our stop loss, which is going to be beneath that swing low. And you're just waiting for the crossover. You're waiting for the 9 to cross over the 20, and then you're going to go ahead and go long, and then you'll have an opportunity there to probably pick the bottom of this dollar yen. So if we were going to take that trade, we also have to factor in a couple other things. Number one, let's say we got a bid right up there at like 147.50, and then your stop loss is going to be down there around 147.14. So we're going to be looking at probably 36 pips. And I'm just guessing, guys, where the crossover is going to line up, if it even does. You'll have a chance there potentially to play off of that NFP bottom, which I like. I like that a lot. Now, big picture, is it a good idea? It's not a bad one. We just got to remember it's Friday, and there's going to be a market close today, and it's going to close through the weekend. So you'd almost be in a position where, am I stuck holding the yen over the weekend, or am I stuck holding dollars over the weekend? I don't know. That's incredibly risky in this news cycle just because the Trump administration does some incredible stuff. Right here on the 5 minute, you can see that crossover. Boom, just you called that dump, which is really something, the way that these things are that accurate on different time frames. I mean, that's really something. This right here, do we get the comeback? It's really hard. It's really hard. So, what you'd love to see, what I would love to see, I would love to see this dollar yen trade down here a little bit, and then we get this crossover. I mean, even the 5 minute would give me a lot more confidence than the 1 minute that will going into the U.S. session here. But you can see we're heavily in oversold territory, and we've got an opportunity potentially to bid and pick a bottom. It's not a bad idea. It's not a bad idea at all. So I'll be watching that one relatively closely. 4-hour chart, if you're serious about it, you probably be watching this 4-hour chart as we go into next week's session. So I don't know that I would be just unloading and taking the sell right here if this does set up, but I would be watching relatively closely what happens on the 4-hour as we roll deeper into today's session and get ready for next week. All right, now, as far as the indices, I've been asked several questions on the U.S. indices. This was sort of our 5-8-13, really a pretty brilliant type of a strategy there. You sort of got out right there, but really trending higher. So if we were going to go ahead and look at what's happening, man, that level's still good in gold. Let's go to U.S. 30. So what I always say, a lot of folks really want to trade the U.S. indices after an NFP. And that's great. Just be ready to understand that range is very important. That's going to be our NFP range. So we need to know where the top of that is and where the bottom of it is. Now, we got about another 30 minutes until we get the market open. Okay, so if we do rotate back down in here, that's sort of what I expect. If we do rotate, then we could potentially be looking for a break either way. Now, what do we think is going to happen? I think you're probably going to see a big bullish day for U.S. stocks. And the reason why is our interest rate expectations have had to have shifted from, okay, we're going to get a quarter point to maybe we get more. Maybe we get another one. Maybe we get another one. Maybe we cut a full point by Christmas. We're looking at a stagflation scenario. There's no question about it. To avoid that, what happens? Typically what governments like to do is they like to cut interest rates to support the jobs economy and grow, the jobs market and grow the aggregate economy. That typically makes more people happy than just the prices being high. Because listen, if you have a job that's paying you money, that's better than not having a job and still having to pay, $25 for that steak. At least if you're making $25 a day and you've got to pay $25 for the steak, you're breaking even. So that's sort of the mindset behind policymakers. It always has been. Does it help us, though? Does it help the global economy? No, it doesn't. So I think that the stocks, you could definitely see stocks rally in a big, big way today. The U.S. 100 futures is already up about 0.75%. The E-mini S&P 500 is really flat, 0.33%, and the E-mini Dow is absolutely flat. So this is the U.S. 30. That's sort of definitely what you want to look at on the lower time frames. Now, as far as what our macro situation looks like, we talked a lot about this compression right around 45,000, and then when it was time to go, what were we looking to do? Boom, boom. We were looking to buy 45,000. There's no question, 45,000 is the key in the Dow 30. So when we talk about how to trade it right now, do I want to buy pullbacks? Yeah, I would buy pullbacks, but I would do it from down here, 45,000. What we've seen here is just a really flat market. Really flat. I mean, look at the dojis. I mean, you got a daily triple top essentially. Top right there, 45,730, 45,7. High right there is 45,760. So basically 45,750, is sort of the new 45, right? So I would be very careful. I could definitely see us going up and testing 45,750 today. I could definitely see that, especially after that NFP number. But anything can happen, guys. People could get scared. Investors could get spooked. It's really hard to say. But something like this, you want to be bullish. Do you have a good level to buy from? 45, 45, 45, and 45. But could we make a Fibonacci play? I mean, look, you go right down to 38%, which is a 45.4, 410, and then you bounce. The thing of it is do I want to get involved? This has the potential to be a big trend. Okay, now we just saw all of the futures contracts and the indices for equities go positive. Could be headed higher today. So that's what I'd be watching. I mean, I would love a big sell-off today. Buy right above 45,000. Feel pretty good about that. More than likely, you're going to trend higher from here. And remember, to the top side, that 45,750 is big. That area right up there is very big. It's been tested several times. Once it breaks, 46, 47.50. And if we cut interest rates down to nothing, that could be what's happening. All right, let's go ahead and take a look at E-mini E-mini NASDAQ. I know a lot of you trade this just because it's so incredibly wild. It's active. Something like this on a daily, lock in those all-time highs. All-time high right there at 24,068.50. So somewhere right up in there. Definitely know where that is. As far as what can you do right now to do it, to trade it, I would wait for this to set up. I really would. I wouldn't just go diving in. There's your 30 minutes, though. So look how much different this chart is. So your NFP bar is going to be something like that. 15 seconds, we'll know the top of it. So there will be decisions made based on these highs and lows. We may just break right out and go up and have a look at those all-time highs. Right up there, those are 24,067. We're printing 23,873. I think it's possible you had all-time highs today and test them. E-mini NASDAQ futures, September contract. And we are going to be rolling this over relatively soon, so be aware of that as well. Okay, so there's price action right at the top of your NFP. I mean, this stuff, guys, this stuff's like clockwork. So what do we got? Well, we got sort of a failed auction developing. Is the market pushing higher? No, it's rotating back down into the guts of this thing. Wait for the U.S. Open in about 30 minutes. You're going to get a big rush of action. But this is touchy. I'm waiting for Trump. Has Trump said anything yet? All right, let me see, Anthony. I just came into this stream. What are your thoughts on the report? Bullish signal or bearish signal? This is what's important. The top line is garbage. I mean, it really is a bad report. 22,000. We were expecting 73. Unemployment rate goes to 4.3%. Sort of figured that. I thought it was going higher. I don't see how it's not higher with this revision. Excuse me. But the last paragraph, total non-farm payroll employment was revised down by 27,000 from 14 to negative 13,000. Negative 13,000. That's got to be the story of the day. It's got to be the story of the day. There was actually a negative print in NFP. That is almost unheard of. So this right here is sort of our historical levels. You can see the last time you had a negative NFP print was like back in COVID, of course. I believe it was in 2021. But right there, you got the global financial crisis. We had some negative unemployment there. COVID-19, of course, everybody remembers. Everybody pretty much stopped working for whatever reason. And then what'd you got? Since then, we've been just positive. I believe there was one negative print in 2021 that was a surprise. This is the type of stuff that's going to have everybody is going to be really concerned about that negative June print. And they could say, well, we changed folks that are actually counting the jobs now. I mean, what are the talking points from CNBC? It's got to be stagflation. All right, there you go. Hope that tepid jobs data, tepid's a nice way of putting it, will trigger a Fed rate cut. Payrolls rose to 22,000. I mean, what's everybody saying? In August, less than expected and further hiring slowdown. There you go. 10-year Treasury yields slide to lowest level since April. That means that they're going to start cutting interest rates aggressively. What can we say about our expectations? 99% for a rate cut. Let's check them out. They're moving all the time. It's like there's an echo in here. I mean, really, 30. Now we're starting to price in a 0.5 point rate cut. That's how bad that jobs number was. We just said that they're going to start talking about cutting by a half. So if they cut by a half with inflation where it's at right now, you're setting the stage for stagflation. I mean, if you cut by a half, your jobs numbers better go up, because if they don't, you're in big trouble. So this looks to me like the beginning of something very serious on the financial front. Let's go ahead and see where we're going to be at by the end of the year. 350. So they're saying essentially that you're going to have what are we at right now? We're at 4.25. I always forget where exactly we're at. 4.25 to 450, something like that. Yeah, 4.25 to 450. So what are you going to see? You're going to see a 3/4 point rate cut by the end of the year. We just got very aggressive towards the dovish side of the U.S. dollar. Commodities up. U.S. oil hanging out right around 62.25. That's interesting to see oil down that big. Really difficult to say. What do we got from the NASDAQ? NASDAQ's going to be trending higher. Stocks are starting to go high. I mean, believe me, as the traders unpack this report, there's going to be big time angst and concern about an economic contraction, but they're going to price these interest rate cuts that are coming, the expectations, they're going to price those aggressively. And that's really what we have to know as we go into the U.S. session. So be very careful. I mean, like I always say, if you've made a stack of money, probably put it in your pocket. Go have some fun this weekend. That's what I would say. I don't know that I would try to double it or triple it today. I don't think that's the day for it, but keep an eye on those all-time highs in your U.S. indices. I think we probably go up and touch them. As far as the U.S. dollar goes, you're getting destroyed, negative 0.65% for the DXY, and you've got gold. Gold's on the rally, but gold's coming back a little bit. We're still stagnating right around 35.76, which is fascinating. That was our hot number. Silver is coming down a little bit too, but holding up better than gold. If we go into this stagflation, this rate cut cycle, and the economic uncertainty that comes with it, I mean, I stick by my gold at 4,000 call. I really do, and I stick by it. I hate to, when, Shane, when. Gold at 4,000, mid Q1 2026, more than likely. I don't think you get there by the end of the year, but you could. That would be pretty aggressive bidding. But I would say probably, mid Q1, so probably February, 4,000. All right, guys, I'm going to go ahead and sign off. I've been going for a while. Adnan, good to see you. Adnan, Calvin, things are going well. Good to see you, Calvin. I'm confident you're crushing the gold market. Fantastic. Let me see. Tina Jing, 0.5% rate cut going to be enough? No. I don't need. Trump's got to be all over social saying we need to cut by 1%. I guarantee he's blaming the Fed. Guarantee it. So, they're going to be calling from the White House. They're going to want interest rates down at 2%. And if we cut rates like that, given the entrenched inflation, it better work. But we're going into a whole new world. Well, we've been in a new world since COVID, but the economic situation we're going into is not good. You can see it. You can see it all panning out. So I'm curious to see what Trump and the administration will do. If it gets bad enough, those tariffs are probably going away, at least in some part. So we'll see. All right, let's see. We got a couple more questions here. Anthony, why do you think stocks are rising? They're pricing in more aggressive interest rate cuts. So actually what's bad for the jobs numbers is going to be good for stocks because they want to know. It's not enough to just say, okay, we're going to get a 25 basis point rate cut. We all sort of knew that. Jay Powell was going to have to do that. But now we're talking about 0.5%. Now all of a sudden the futures markets are pricing 0.5% in September on the 18th. Okay. That's it. That's the market driver. Here's another thing to think about. The FOMC that we were talking about, Lisa Cook, mortgage fraud. I don't remember the other folks, the other gal that just resigned back in August. That's 2 members that are potentially not going to be on that voting block. I mean, they're going to try to get Powell out of there by the end of the year, especially with numbers this bad. So, let's say that you get 2 new FOMC members, and remember, these are appointees that are approved by Congress. I mean, Trump's going to appoint. He's going to appoint dubs. He's going to appoint people that want to cut interest rates. Okay, so let's say you get 2 of those members in there. Let's say Jay Powell is finished early. Most folks think he's going to serve through his tenure in May there. I think he's gone by the end of the year. I've been saying that for a while. The pressure's immense right now. That negative print, it's immense. What happens when that FOMC is all doves? It might as well be the Bank of Japan. They'll cut interest rates down to nothing. It won't be good. All you're trying to do is stave off a correction at that point. Will it work? I don't know. What we do know is this. We're in a state of flux right now. That's for sure. Sengoku, what would be your retrace level on gold for the hold for the long term? 3,500. We won't get it. Doesn't look like to me. 35.76 printing. Of course, you'd love a big time retracement, down to 3,000 or something, and then get the big rally. But you could definitely get a washout down to 3,500. All right, Steve, have a great weekend. Yeah, it's time to go. I've been going for too long. Got a couple more questions. Let me see. Casper, do you have any group that I can join? Yeah, just join the live streams here. You can head on over to howtotrade.com. Join up there. We got a bunch of Academy videos. How to Trade Calm on YouTube. A bunch of videos there. Forex Signals TV. We got videos. Switch Markets is the newest channel that we're trying to get off the ground. You can go on over to Switch Markets on YouTube. And if you need a broker, you can check out Switch Markets as well. Let me see, Anthony. All right, one more question, guys. Two more questions. Okay, Yuglione, Rao, is gold really will fly more? Yeah. Gold's just getting started. I think the big mover will be silver, though. Silver's getting established above 40. It will not shock me to see 45 or 50. I know that sounds crazy, but it's very possible. Let me see. Absolutely. Blue, you're welcome. All right, so let me see. So employment is up and jobs are down. Unemployment is up and jobs are down. How is that possibly good? It signals rate cuts, Anthony. It means they're going to have to cut interest rates. Remember, the Fed has two jobs: maximum employment, pricing stability. If we know anything, they'll throw pricing stability away to put people back to work. It's really all predicated upon food. I mean, you have to be able to eat. If you can't eat, that's when populations get restless. And the idea here is to keep populations docile. So you make sure that folks have money for food and shelter and things, and it doesn't really matter what it costs at the end of the day as long as they have it. I know that sounds ridiculously stupid, and believe me, I don't agree with that. But that's the way the bankers see it. That's why they have central banks. It's to keep everybody sort of in line. Well, you got something to eat and you got a place to live, don't you? Yeah, but it's really expensive. Well, you still got one. If you guys want to trade any of these ideas or take your trading education to the next level, check out How to Trade, but also Switch Markets. Bring your ambition into focus with Switch Markets. Thousands of markets, zero commission accounts, tight spreads. Check it out if you're looking to get involved. All right, guys, I'm going to go ahead and sign off. It's been a long one. I didn't anticipate going that long. Have a great U.S. Open. Remember, if you made a lot of money, you take a little bit home with you. You have permission. You have my permission. If not, maybe stick around for the Open. But be very careful. It looks to me like we could definitely run at the all-time highs, but it's anyone's guess, guys. We know a couple of things. We know that the Trump administration is going to get involved today. We know that they are. They're going to say something. They're going to go after somebody. They're going to try to impact this in a positive fashion and put lipstick on a pig. They will. That has a way of swaying markets. It's not like previous administrations. They can announce tariffs. They can announce new firings. They can announce investigations. They can have all these things they can do. Be ready for it. Be ready for it. All right, guys, you have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.